Okay, I want to show you what happened here on the close with Tesla. A lot of people talking about it. There was some insane volatility in the last 15 minutes, which we all expected with triple witching and the stock going into the S&P 500. So here we are. We basically at around 3 p.m. we're trading around 670, and then within half an hour we had plunged down to below 630, and then we rallied back up to about 674, and then we actually closed right around here at 655. But then right after the close, there was a spike to 695, and then we really traded around 680 quite a bit. Now I just switched us from a bar chart to a tick by tick chart. This is very interesting. This is tick by tick. So look, here's 4 p.m. Okay, this is 4 p.m. and we were trading at 665. Okay, tick by tick. Now when we go to the next tick, it's just after 4. It's still 665, but then the next trade is 695, and it's for 69 million shares. And then the next trade is 658 for 3,400 shares. Then there's a bunch of trades right at 665 again and again, and then a little bit of the next tick right back up to 695 for 15,000, 3,000, 1,000. Now they're suggesting the gray area is after 4 p.m. But I did not see this right on the close. And this could have all happened in the bat of an eye. But basically, this was the closing right here. So this is crazy. Huge swings, some volume on each one of those. But I'm not quite sure, what they're going to call the settlement on this stock. Originally they said it was a 658 settlement, and then they changed it to a 695 settlement. That was not a 695 settlement. That is not the right price. And the reason why they're probably doing that is because somebody paid up here 69 million shares traded at 695 after the close, like the market on close trade, and this market was nowhere near that. Come on. Maybe this is that market on close order. Look at the big blue bar here. Right, that shows you this is I guess the market on close order where they try to balance all the buys with the sales. Basically, it was 665 bids, 695 offers, really what we saw in there. Now let's switch over to the time and sales of the call options, and let's look at what they did in the last 10 seconds of trading. That'll give you a little bit of a clue of what crazy pricing was going on. Okay, so Tesla just closed. You see the stock price here at 658. This is where it's trading after the close at 680, because after the close, this is when most of the indexes are going to come in, and on market on close, they're then going to buy their allocation to go into their index. So all these funds would have had orders waiting market on close, and they don't mind paying a little bit more as long as they're tracking the index. So maybe this can help you understand how call options work. The stock's at 658 on the close. The 660 call is worth 0 if the stock's at 658. Let's see where the 660 call last traded. See, the last trade was the 650 call, traded at 205. The 670 call traded at 56 cents. The 680 call traded at 15 cents. Here's a 660 call at 658. A 660 call traded for $1.50. If the stock is at 680, what is a 660 call worth? It's worth $20, and someone just bought one for $1.50, if you can believe it, on the 660 call. I tried to buy the 670 call for 50 cents, but the market maker jumped in front of me, so it never traded below 51 on the close. Oh, this is crazy. The 660 calls were trading at $1 right on the close. Oh my God, that's 20 times in 3 minutes. I did not see that. I was watching the 670s. I did not see the 660s trading at $1. And here's another 650 call trading for $2.50. Oh my God, oh, this is so frustrating for me. How can I not see that? That all happened in the last 5 seconds. How in the world did that happen? Wow. So if you think about how a call is priced, maybe it would be easier for you to understand what happens in the last minute. Now, although the market's closed right at 4 p.m., the stock can trade until 5:30. So now you watch what the market does after the close. But right at 4 p.m., that's what these were trading at. So all of them went up 20 times after the close. But if you had bought the 700 call right before the close, it's not going to be worth anything because the stock's trading at 680. Let me draw that out for you to help you understand what happened. What's nice about this example is that there's no time premium left, right? There's no more extrinsic. It's what happens in the next hour and a half after the option market has stopped trading. So let's pull up and walk through what the 660 worth with the stock now at 680 to 675. Now I just want to show you tick by tick what happened with the 660 call, which closed offered at $1.50 with Tesla at 658. Time and Sell says it was 655 on the close. So obviously the settlement can't be 695 because the price would be very different, wouldn't it? So with the stock at 658 or 655, look at this. It trades one lot, 7 lots at $1. And then there's one trade for one lot at $1.50. But look at this. Now this is all, everything in here is within the last 1 minute, but this is tick by tick chart. So don't confuse this with a bar chart. It's just a tick chart that's been compressed within 1 minute. You see this big blue bar here, this price right here at $1.50, 45 contracts traded at $1.50, and then one traded at $1. So there was an opportunity for me to go in there. With 30 seconds left, I could have been in there buying these for $1.50, and I just did not see them. I'm so frustrated with myself. And they were bid at $1 with the last, let's just call, this is probably all happening in the last 1 to 2 to 3 seconds. That's how quickly this probably happened here. Right, but this just shows you what actually traded on the 660. So they traded quite a few at $1. So let's go and calculate what the profit would have been had we bought one of these at $1. This is our profit and loss graph. This is the stock price along the bottom, Tesla's stock price from 630 to 700. Then we have our profit and loss along the left side, the vertical line. The zero line goes across to 661. That is our break even if we pay $1 for a 660 call strike. If it goes up, we have unlimited gains to the right. So at 670 stock price, we make $10 return on our $1 investment. At 680, we make $20 or 20 times return on our investment. At 690, we make $30 or 30 times investment. And at 700, we make 40 times or $40 on our $1 investment. Now during this period of time, the market could go down. If it does, we have limited loss. If it goes to 640, or if it drops even to 650 or 660, we can't lose more than our dollar. Now our goal is to make 20 times, so we're targeting 20 times, which would be 680 on the stock price. So to summarize my frustration, Tesla went to 680 right after the close, and I could have bought a call when it was at 558 a minute before, and we could have made 20 times our money, no matter which call you bought. That was so frustrating today, but I hope you can understand how that works and how you can value that, and you go and find your own 20x. Good luck.